welcome to Markets Today. I'm Lata Venkatesh and with me is Surabhi Upadhyay. Well, you really want to ask what's going on in the markets. This is for the third day in a row that the markets have put on weight. And what's more important, not just defended the 8,000 mark, they've also outperformed global markets for the second day in a row. You're wondering what's going right with the markets today. Hi, Surabhi.
Hi, Lata. Absolutely. What a stunning recovery towards the last 1 hour of trade. It completely changed the color on the screen. Okay, there's lots to talk about. Let's start with the headlines. Choppy day of trade on Dalal Street. The Nifty falls below 8,000, but a late recovery helps it close above that mark with a gain of 0.4%. The Sensex puts on over 100 points. Banks and auto stocks lead the pullback.
The mid-cap index rises and gains 0.3%, a shade below the frontline indices. Jet Airways takes off 14% on good volumes. HCL Infosystems rises 6% because of the distribution alliance with Dell, and Biocon ends positive after SEBI approves the IPO of its subsidiary Syngene.
May trade deficit comes in at a 3-month low of $10.41 billion. Exports continue to contract, falling 20% over last year. Imports are down 16.5% over last year, but gold imports remain steady. Crude imports do rise compared to the previous month.
Well, those were some of the headlines that the markets are worried about, and here are the experts that we have lined up on the show for you. Prabhat Avasthi of Nomura Financial Advisory will join in with his take on the markets. We will also listen in to Agriculture Secretary Siraj Hussain on the government's plan for tackling any possible in food prices because of the monsoons. And we'll also tell you why the Met Department is still holding on to its monsoon forecast. All that coming away in the next half hour, but first up, Surabhi, the markets.
All right, Lata, so let's straight away get to it. A roller coaster ride on the Dalal Street. Markets opened with deep cuts, then traded with losses for most of the session, but a late recovery lifted sentiment. Sonia Shenoy is now here with the day's trading highlights. Sonia, what a volatile day, but after all, a happy ending.
Oh, yes, and the market has been climbing the wall of worry in the last couple of days, So today it was the third consecutive day of gains that the market saw, and all of the chunk of the up move happened in late trade. In fact, the Nifty recovered 100 points from the lows and conquered that 8,050 mark intraday. The Bank Nifty led the market from the front, so the Bank Nifty was up 1%, and now the Bank Nifty has rallied 300 points in the last 3 trading sessions alone. However, there's still some caution in the system, and most traders believe that the market will be in a no trade zone between that 7,900 on the downside and 8,200 on the upside, with 81 to 8150 proving to be a significant resistance for the market. But today we got quite a bit in terms of gains. So the big gainers were from the banking space, as I mentioned. Names like IndusInd Bank, SBI were all higher in trade today, as you can see, about 1 to 3% or so. Heavyweights like HUL, Infosys and L&T also managed to make their presence felt. So all these stocks were up about 0.5 to 1.5%. And auto stocks like Bajaj Auto, Hero MotoCorp and Tata Motors managed to see gains of around 1 to 3%. On the losing end, Cairn and Vedanta were both under pressure post that merger, so down almost about 1 to 3%. BPCL, HDFC and Idea Cellular were a couple of other stocks that too were under pressure today. But in the mid-cap end, you had a wild swing on the upside in late trade. And look at this, names like Jet Airways up 15%, Century Textiles up about 8%, JK Tires, Jindal Saw. There was a long list of stocks that saw buying momentum in late trade. So good days for the markets in the last couple of trading sessions. But now the Greece and the FOMC overhang still remains. So let's see whether the market can continue to climb the wall of worry. Back to you.
Well, thanks a lot for that, Sonia. I take Sonia's point that, it's a wall of worry, but what could have led to this difference? Today, actually, if you pull up the Nifty, you will see exactly at 2 o'clock, the market's taking a U-turn. And it wasn't as if anything changed in the European markets. They were still down. Largely bowed down by the Greek worries. And you notice this pattern even on previous occasions, notably on Friday. Well, all that one can say is that there is still a lot of lack of selling at lower levels. So the shorts or the bears are not making money. Added to it, today there was conversation that the ETF money, the exchange-traded funds abroad, which saw a lot of pull-out of money when India fell out of favor because of the monsoons or because of the earnings, now started seeing a fall in the outflows. They were stabilizing. So probably it was that, it was more because selling was not pulling the markets down that the bears stopped selling. At the same time, the markets are not able to cross that 8,050 mark either. So there is a lot of boring and low volume ranged trading that's happening. It has to break one way or the other. But suffice it that for the moment, at least, we are outperforming all indices. This week alone, the Sensex and the Nifty are up 1%. Practically every other market is in the red.
Absolutely, with lots of those Greek uncertainties in the FOMC outcome as well, that is keeping markets on the tender hooks. On that note, let's get you some opinion. Prabhat Awasthi, head of equities and MD India at Nomura Financial Advisory, says that there isn't much exuberance left in the market at current levels. However, he still maintains his year-end target of 33,500 for the Sensex.
I don't think there is that much exuberance left in the market. The multiples of the market are 15.4 times the lowest they have been in last 1 year. So clearly, at least as far as valuations are telling us, as far as valuations of domestic cyclicals are telling us, there is not that much exuberance in the valuations. I think it's probably somewhat other way around because the valuations are trading at a discount to last 5-year averages. We don't really feel a big need to sort of cut our market target. The earnings trajectory in the marketplace will start to pick up towards the second half. If you start believing that the earnings trajectory is starting to improve, then you could actually end up seeing market multiples move quite swiftly. And therefore, I think that our view on positivity on the market is more on the exit sort of conditions end of this year than the conditions with which we have entered into the market in the beginning of the year.
Okay, that's a view from Nomura. Let's get you the big macro numbers then. India's trade deficit has narrowed down to its lowest level in 3 months. In fact, we saw both exports and imports drop again. Lata, what did you make of the internals, the trends that we got from these numbers?
Well, first of all, as you said, the trade deficit itself has remained a constant. Imports and exports have fallen. At $10.5 billion a month, the math will work out to, about $6 billion of current account deficit per quarter. That's nothing. That would be 1.2% of the GDP. So it's not a worrisome number, this trade deficit number. As well, exports and imports falling. Since they fall together, it's not a deficit issue, but you have to worry about the internals. Before I come to that, crude oil imports, although they are down 40% from year-ago levels, they've inched up a bit. So let's watch that space.
Over the previous month.
Over the previous month. As well, gold imports, they're definitely down month on month. So that is one problem which is coming under control. $2 billion of gold imports in a month or even $2.5 billion is not difficult. We can manage $30 billion in terms of gold imports. It's not that crazy 50-60 billion that used to happen in 2013. The non-gold, non-oil imports, that is the part which the economy imports because it is growing. That one is steady at about actually it's at 21.8 billion. Lower than the 22.6 billion in the previous month. Now, that's what we need to worry about. That shows that the economy is not able to absorb more imports. Likewise, the country's exports are also not growing that much. The non-crude exports are kind of stalling. See, gold, petroleum products, ores, jewelry, all of them are down. Leather, electronic goods, engineering goods are marginally down. Clearly, the impact that the rupee is not falling as much as other currencies is hurting. The only thing that has stood up despite rupee depreciation is the growth in drugs. Drugs and pharmaceuticals are still doing well. The point is global markets weak and therefore our exports are not getting absorbed by our markets. So those would be the two spots of bother. Exports are not growing, which means Indian corporates and quite a bit of Indian corporates are dependent on exports as a percentage. Some 25% of total revenues come from there. That is a big negative as well, that our imports are not growing, especially the non-oil, non-gold category. Those would be the worries. Otherwise, on a macro front, no worries with a $10.5 billion trade deficit.
Okay, all right. Overall, looking good, but some of those internals, as Lata's pointing out, worth noticing. Moving on, the one big trigger that markets have been tracking very closely is the arrival of the monsoon. But the deficiency forecast is perturbing the government. In fact, Siraj Hussain, Agriculture Secretary, he asserts that the government is well prepared with the buffer food stock. Listen in.
Lot more needs to be done, no doubt, but we are definitely better prepared to face the fluctuation in vegetable prices. Having said this, The perishables are more difficult because of the very nature, and also because of the fact that the distance perishable products can travel is not very large. But I do see that the farmer-producer organizations can play a very important role in checking inflationary trends, and not only that, in bringing better prices to farmers for their vegetable and fruits. Very good decision taken by the government was the establishment of a price stabilization fund of rupees 500 crores. So that fund is available to us, and in several commodities the government will intervene appropriately to check any inflationary trends in the market. We have a contingency plan ready for 650 districts. These plans have been prepared by the ICAR institution specializing in dryland farming. It is CREDA in Hyderabad. So they have gone from district to district, consulted the state governments, prepared the plans and uploaded them. And it is not only that. The meteorological department, in consultation with the State Agriculture University, prepares a district level advisory for farmers.
Okay, the big news from the Agri Secretary is that the MSP would be announced sometime this week, maybe as early as Wednesday. Now, the Meteorological Department is still holding firm to its below normal monsoon forecast. We spoke to the officials at the Met.
See, though monsoon has not arrived over northwest India and most parts of the central India, due to a lot of convective activity, most of the regions are very close to normal. Perhaps the northeast is around 22% more than normal, and central India it is more than 18%. So last 2-3 days had been a very good rainfall in the central. Northwest India it is 99%, that is just 1% less than normal.
Okay, that was a word from the Met Department. Now, the Cairn India stock fell over 3% in trade today. Cairn Energy PLC, which owns nearly 10% stake in Cairn India, has indicated that it is not openly supporting the company's merger with Vedanta, at least for the time being. Speaking exclusively to CNBC TV 18, those are the comments that were coming in. In fact, we've got Nayantara Rai joining in, who's been speaking to officials in the company. What is the sticky point here, Nayantara?
Hi, Siddhi. Hi, Lata. So, 2 days after that merger was announced, I reached out to Cairn Energy PLC to ask what it made of the proposal, of the valuations. But like you said, Cairn Energy PLC not revealing too much, saying it has been come to its attention such a merger has been announced, and in due course it will assess it and see whether it works well for Cairn Energy as a shareholder in Cairn India. So not really revealing much in that statement. The tax case, the ongoing tax case perhaps is going to play a big role on what Cairn Energy PLC decides, and its decision is crucial because it makes up 25% of the minority shareholder vote in Cairn India. It has a 9.8% stake in Cairn India. There is a $1.6 billion draft assessment tax notice that has been sent by India to Cairn Energy PLC. Cairn Energy PLC telling CNBC TV 18 today there is no change in the in its own stance, is continuing to contest that, is invoking articles under the UK-India treaty, and besides that, it is still not allowed to sell any of its shares in Cairn India. So will the government also intervene as far as that merger goes to ensure that Cairn Energy PLC does not completely exit the country? We did see that, for example, with Hutchison. So will Cairn Energy PLC be locked into Vedanta? Will Cairn Energy PLC want to remain locked in Vedanta is, of course, the other big question. So this story far from over.
Okay, that's interesting. Thanks a lot for that, Nayantara. That battle is not over. The Reliance infra stock may have taken a beating today, but Anil Ambani has big plans for his company. In fact, the group has applied for 6 industrial licenses from the Department of Industrial Policy and Promotion. Ritupurna Bhayan has this report. Ritu.
These industrial licenses have been filed for both defense and aerospace sectors by 5 newly formed companies and in 6 different segments of defense and aerospace. We also now get to know the names of these new companies, which are basically Reliance Helicopters Limited, and they have filed an industrial license for manufacturing of helicopters, Reliance Aerostructures Limited for airplanes, Reliance Land Systems for weapons and ammunition, Reliance Technologies for weapons and ammunition, Reliance Reliance propulsion systems for spacecraft, launch vehicles, as well as assembly of aircraft and spacecraft assembly. What we now know is that while these industrial licenses were filed yesterday, last week itself there was one more industrial license which was filed by one of, again, Reliance Group companies that was for space-related manufacturing. So in a matter of about 7-8 days, we have seen 7 industrial licenses being filed, and we understand that almost all of these companies belong or are subsidiaries of Reliance Infrastructure, and it now remains to be seen what kind of plans these companies have as far as the defense and aerospace sector is concerned, because it will take about 6 months to 1 year to have these industrial licenses cleared, because state governments and other departments also have to give the go-ahead before this industrial license can be taken by the DIPP for consideration. With that, it's back to you.
All right, thank you so much for that. So the ADAG Group gearing up with new business plans. Time for a break now, but coming up, we'll tell you about all the stocks that were in news today.